Something hot for Axe? An Iron Condor?
Please.
Go back to B school.
Anything good yet?
How about a strangle where we arc the Vega?
You go back to yourself.
I'm Taylor Mason, Chief Investment Officer, Axe Capital. And I have a silverback gorilla of an idea.
Let's talk about how professional investors pick stocks and these other business and finance lessons from the first episode of Billion Season 3, based on my work experience at Goldman Sachs in New York City, and based on my work experience at the top hedge funds in the world. Now please like, comment, and subscribe, and stick around, because at the end of this video, I'm going to grade the episode for Wall Street Realism with a buy, hold, or sell rating. In Season 2, Axe made a fortune by shorting ice juice after he had somebody put poison in the product, and Axe got arrested for this at the 9/11 memorial. Now, as a result, he can't trade stocks for now. Instead, what he does is he gets his employees to come up with investment ideas, which we will learn about in this video.
There's going to be an idea dinner night after tomorrow. Platinum invite.
That. Having this meeting without Axe here. All of this.
Easy dollar bill.
Now, Taylor, the chief investment officer, wants Axe's analysts and portfolio managers to find killer stock ideas for Axe to pitch at what's called an idea dinner, which is an event where hedge fund managers discuss investment ideas. Now, I've attended many of these dinners, but they're not always useful, since managers often promote stocks that they already own in order to influence others to buy and drive up the stock price, meaning they talk their book. Now, the way that Taylor gets the employees of Axe Capital to agree to come up with investment ideas is he says this.
I get it. You're worried that every day you're on the sidelines makes it harder for you to make your numbers for the year.
Not harder. Impossible.
If you come through for me now, you will all make a bonus of at least what you made last year.
In terms of how much money these employees make, let's first quickly discuss hedge fund fees. Now, hedge funds often charge 2 and 20%. And what this means is a 2% annual management fee and a 20% of the profits fee that they generate for investors. For example, if a hedge fund has $4 billion in assets under management, then every year they charge a 2% management fee, which is $80 million in fees to pay employees and for other expenses. Now, if this $4 billion fund is up 25% in a given year, then they made $1 billion for investors. The hedge fund then keeps 20% of the $1 billion in profits, meaning $200 million. And usually the owner of the hedge fund, meaning Bobby Axelrod, keeps half of the $200 million, meaning $100 million. And the other half goes to the portfolio managers that work for Axe, depending on how much money they made the firm that year. Then the PMs, or portfolio managers, give part of that amount to their analysts, often at their full discretion. Now, since Axe Capital is modeled after Steve Cohen's firm, which is called SAC, or at least it was before the government shut it down, the 2% and 20% in fees is likely much higher, meaning as high as 3 and 50%, which is what SAC charged given its incredible yet criminal track record. Now, in terms of what killer investment ideas to pitch to Axe, here we see Taylor using a hammer to take apart consumer electronic devices to find out what components, meaning chips, etc., are inside of them, so that Axe Capital can invest in companies that are inputs. And Taylor explains the killer idea to Axe in his new Manhattan penthouse, which we're going to take a tour of together later on in this video.
You have fun smashing apart?
A blast. And I found a component that matched the specs for a Cortez chip. Cortez is the main supplier for 85% of the IoT products on the market.
So, that's the shot.
That's the shot.
Accurate. And quite often the best investments in tech are the component makers. And whenever you notice that a product is selling extremely well, always ask yourself, what are the components that make up that product? As you can make a fortune that way quite often, and more money than investing in the underlying company itself. Now, the way to find out what components are in a product is to look at the risk section of the annual reports, meaning the 10Ks, of the companies that make the products that has components inside of them. For example, my old boss and mentor, Carson Levitt, was George Soros' top portfolio manager in 1999. And he made George Soros $1 billion in one stock in the month of December of 1999. And he did this by investing in Qualcomm, as Qualcomm made components for mobile phones. Now, at the idea dinner, instead of Axe showing up, Taylor does.
I'm Taylor Mason, Chief Investment Officer, Axe Capital, and I have a silverback gorilla of an idea.
I love the confidence. Now, in business, confidence leads to perceived competence. And at this idea dinner, there's actually two real-life hedge fund portfolio managers. We have Michael Platt from Blue Crest, and we also have Mark Lassery from Avenue Capital, where Chelsea Clinton used to work. Let's hear the rest of Taylor's pitch.
It's an angle of attack on an internet sector that's worth 12x what you think it is. But the sector is only the beginning. I'll walk you through both the technical side and the types of derivatives that are available to both bet on it and to effectively hedge it so that the play is risk neutral.
Now, Taylor starts with implying that the size of the total addressable market is 12 times bigger than what the street thinks it is. So this chip investment could easily be a 10-bagger. And sophisticated investors do not invest in small markets. Now, after I worked in the hedge fund industry, I worked in the venture capital industry where I partnered on a deal with Kleiner Perkins, who invested pre-IPO in Apple, Google, and Amazon. And my friend at Kleiner told me that they usually only invest in companies when the size of the total addressable market is at least $20 billion. Why? Because in the unlikely event that the company that they invested in gets 5% share of the market, then this means $1 billion in annual revenue. Now, Taylor also mentioned to use derivatives, meaning options, in order to make more money on the investment, or protect, meaning hedge the investment in case the stock price of Cortez goes down. Now, the way to make much more money in a stock than just owning the stock of fictional company Cortez is you can use call options and pay a small amount of money to buy a call. If Cortez goes up by 10 times, then this call can easily make you 50 to 100 times your investment if you buy calls. And these calls that expire usually in more than 1 year are called leaps. And the most you can lose on the call is what you paid for that call position. Now, in terms of protecting your investment, if Cortez goes down, what you can do is you can buy a put option. So if the stock of Cortez goes down, you make a lot of money on the put. And if the stock of Cortez goes up, all you lose is what you paid for the puts. Now, Taylor wouldn't simply mention buying leaps and puts, as the investors at the idea dinner are very sophisticated investors. Instead, mention a way to protect the investment if you want to sell it is to perhaps buy what's called a zero-cost collar position, which I explain in detail in Season 2, Episode 1, which you can click on the description of the video that you're currently watching. Now, Axe's other employees pitch other investment ideas that were not nearly as good as Taylor's.
Something hot for Axe, an Iron Condor.
Please.
Go back to B school.
Anything good yet?
How about a strangle where we arc the Vegas?
You go back to yourself.
So,
Strangles and Iron Condors are more advanced option strategies that involve using two option positions with strangles, either long or short. And with Iron Condors, you go long and short, 4 options in total, as I explain in my options course. And for more details on my options course, please see the description of this video. Separately, in this video, Bobby's enemy, Todd Krakow, gets this very powerful job.
And newly appointed U.S. Treasury Secretary Todd Krakow was sworn in today. Top economic
Look at that preening.
common ground over the weekend.
You know, his name on money may actually make me like it less.
So, the best way to understand the Treasury, which is headed by Janet Yellen, and the Federal Reserve, which Jerome Powell heads, is to think of them as doctors that fix the health of the U.S. economy, using either monetary policy or fiscal policy. Now, the Federal Reserve's most powerful medical weapon for fixing the economy is the ability to change interest rates. Now, let's say the Federal Reserve wants to cut interest rates in order to boost the economy. Well, what they do is, let's assume that you're all investors, okay, and you own Treasury bills, okay, and I'm the Federal Reserve, okay, so you own this. So what I can do is I can give you money to buy back the treasuries from you. And what that just did was that put more money in the system by buying back treasuries. And whenever the supply of anything goes up, the price goes down, meaning interest rates go down. Now, if the Federal Reserve wants to raise interest rates, then what they do is they sell you bonds. Okay, so I sell you this, okay, in return for your money. which I take out of circulation. And this is referred to as the policy of money, or better said, monetary policy. Now, what medicine does the Treasury, like Axe's enemy here, Todd Krakow, do to fix a healthy economy? Well, what they do is they use what's called fiscal policy, including collecting taxes, or when times are really tough, like with COVID, what they can do is they can issue what are called stimulus checks. And right here on this stimulus check, it says economic impact payment. And when it comes to stimulus checks, citizens who worry about our debt crisis call these things steal from us checks. And that was awful dad humor. I'm so sorry. Now, new Treasury Secretary Todd Krakow in Billions previously ran a massive portfolio. And many finance executives want to go into politics after they make their fortune. Just like former Goldman Sachs CEO Hank Paulson, who was the head of the Treasury Department during the fall of 2008 when we were literally within 24 hours of bank machines not working. Now, the medicine that the Treasury Secretary Hank Paulson used to fix the economy was by giving liquidity to the market by buying the crappiest housing-related mortgage securities and bank stocks as part of what is called TARP, or the Troubled Asset Release Program. Now, if Paulson did not do this, then many large banks would have gone bankrupt. Now, in the fall of 2008, the Federal Reserve, headed by Ben Bernanke, who was played by Paul Giamatti in the movie Too Big to Fail, cut interest rates a lot. And Ben Bernanke did his PhD at Princeton University in depressionary economics. So he was very quick to cut rates so that the Great Recession of 2008 did not become another Great Depression. Separately, in this episode of Billions, Spyro, who used to work at the SEC, joins Axe Capital. And Axe moved their offices from Connecticut to New York City, likely because Axe's wife left him, and Axe moved into an incredible bachelor pad that we're going to check out together in a second. Now, Spyro was also in The Wolf of Wall Street, which I did a review on as well. Now, in Axe's new office, Wendy gave him some incredible advice.
Whoever you're trying to destroy, stop. You taught me an average trader makes a trade and feels good. A great trader makes a trade and feels nothing. As in, be cold and act. Don't get hung up on emotion.
Accurate. The best investors and business people are like Elon Musk. They're very unemotional. Now, I've worked for billionaires at hedge funds that were very unemotional, and they never gave out high fives when we made a lot of money. Conversely, and more importantly, they were the exact same way when we lost a lot of money. Now, we need to be unemotional when investing, or else we'll make a lot of mistakes. And as Warren Buffett said, the New York Stock Exchange is the only store in the world where investors, meaning consumers, sell stuff when it goes on sale. Let's check out Axe's new 7,500 square foot bachelor pad in New York City in the Tribeca neighborhood.
Cool bachelor pad, bro.
Hey, want dinner? We need to do that?
So this penthouse is located at 145 Hudson Street, and it was listed for $45 million in 2017. Now, as you can see, it has a private elevator and also has 18-foot high ceilings. And the terrace alone is 4,500 square feet. And as you can see, it has a 360-degree view here, including a view of One World Trade Center. Now, in this episode, Wendy performs the life-changing Dickens process on Axe, which we're going to do together as an exercise in this video. And when Maggie Siff was preparing to play the role of psychiatrist Wendy Rhodes in this episode, she was actually coached in real life by Tony Robbins.
I want to run a Dickens process. Tony Robbins took me through it a few years back, so sit down.
Now, the Dickens method can be a life-changing neuroassociative conditioning exercise. So let's do the Dickens exercise together. All right, step one, I want you to think about limiting beliefs that you have in your life that have hurt your ability to reach your full potential in the past and in the present. For example, my lack of confidence has hurt my ability to ace interviews or be myself around senior executives, or not give a great speech, or not to ask out incredible women on a date. Now, you have 60 seconds to do this life-changing exercise and really think about how your limiting beliefs have hurt you in the past and in the present. And during this exercise, I really want you to feel the pain that your limiting beliefs have had on you. And I want you to feel this pain because later on in this video, you're going to feel ultimate pleasure as we destroy your limiting beliefs together. Again, over the next 60 seconds, really feel the pain that your self-inflicted limiting beliefs have had on you in the past and in the present. Also, think about what this pain has cost you in your life in the past and in the present. I'll see you in 60 seconds. Welcome back. Step 2 is for the next 60 seconds, think about how your limiting beliefs will impact your future. And think of all the problems that you will be experiencing in the future due to your limiting beliefs. I'll see you in 60 seconds. Welcome back. Now, the good news is that, as Tony Robbins says, the past does not equal the future. And all that pain that you felt when you thought about your future does not have to take place if and only if you eliminate your limiting beliefs from your life right now, because they are self-inflicted. You are your own biggest enemy because of your limiting beliefs, so please stop the self-sabotage. Now, Les Brown once said, someone else's opinion of you does not have to become your reality. So when you felt the pain in step 2 of your future self, I want you to eliminate the pain you felt in the future because of your limiting beliefs. Stop hurting your potential with these fictional limiting beliefs that you invented in your mind. And just like the Rodin sculpture, I think, therefore I am. Now, God created you the way He wanted to, and you are perfect. And when we create these limiting beliefs, we are questioning our faith. And it's not work that kills us, it's worry. And Sir Winston Churchill once said that he met a man on his deathbed who talked about all the worries he had in his life, none of which came true. God has a plan for you, and it does not involve your limiting beliefs. And again, I humbly believe that when we create these limiting beliefs in our minds, we are questioning our faith, which we don't want to do. And don't worry, because God already knows what will happen, and that should really put your mind and your heart at ease. Let's move on to our final step, which is step 3 of 3, where we calculate what I created and I refer to as your enemy score. You are your own worst enemy. If you think that he or she is out of your league, You're so money, you don't even know. So there's this concept I came up with called the networking match equation strategy, or NME, enemy. It applies to dating and to networking. And I explain this in more detail. Okay, why my enemy strategy, your own worst enemy, will change your life. But let me give you an example first in dating. Okay, and then we will apply it to networking for a job, or networking for a customer, or networking for any reason really. Have you ever seen somebody else dating somebody and the person they're dating is way better looking than they are? Of course you have. And you wonder to yourself, how did this person get that other person to go out with them? How did this guy get that perfect woman to go out with them, or vice versa? She is so gorgeous, smart, outgoing, and personable. But he is not a good-looking guy and not the smartest guy. How the heck did this guy get in a relationship that doesn't match his looks or intelligence? Now let's bring this equation into balance. Okay, the enemy equation. Stick with me here. So he believes in his heart that he's a 10 and she'll believe the same thing. So he's a 1 out of 10. Okay, we need 9 things to get him up to a 10 out of 10. Okay, to make this equation balanced. And this has a lot to do with networking as well. Okay, so he's a 1 out of 10. He thinks he is at first, but he's outgoing. Okay, that's another point. Okay, good. So now he's 2 out of 10. He's personable. That's another one. Now he's 3 out of 10. Okay, he deals well with rejection or failure. We're at 4 now. He's a risk taker. That's a 5. He thinks long-term, knowing that the pain of not spending the rest of his life with her is way higher than the pain of him getting rejected by her. Okay, now we're at a 6. He asks. That's a big one. He asks. You never get what you want in life. You'll never get a raise, promotion, a date, or anything without asking. Okay, we're at 7. He thinks more with his heart and less with his head. He's passionate. We're at 8 now. He's incredibly unique, interesting, and impressive in his own ways. We're at 10. The equation is now in balance. Wait a minute. He has more positive qualities. But why do we care? I mean, the equation is in balance. He's a 10, she's a 10. Well, that's the problem. We need 5 more, so she thinks that he is way out of her league. Oh yeah, we forgot that he is passionate about everything in life, including his job, because he doesn't have a job, he has a passion. He's now a 15. He's passionate about everything in his life, and she's a 10. So in his mind, he is 50% out of her league. That gives him the confidence to ask her out on a date. You are your own worst enemy if you think that he or she is out of your league. Not only are you on par with them, you're up here. You're out of their league. The same thing with networking. You can ask anybody you want, not only out on a date, but also for a networking meeting. Why is analyzing love and dating relevant? Well, networking and dating is identical. So if you've ever asked somebody out on a date, you were kind of networking. Welcome back. Please sign up for the Tony Robbins UPW, meaning Unleash the Power Within event, and sign up so you do it in person. It's a 4-day event, and it changed my life, and it will change yours too. And I actually met Tony Robbins as he was looking to invest in one of my portfolio companies when I worked in venture capital. And he changed my life by encouraging me to start my own business and teach, and he can change your life too. Let's talk about grading this episode for Wall Street Realism with a buy, hold, or sell rating. The episode did a superb job of accurately showing the idea dinner process and how Taylor did a teardown of a consumer electronic device in order to find a component-based company to invest in. Now, what was amazing about the idea dinner is that 2 real-life hedge fund portfolio managers showed up, meaning Michael Platt from Blue Crest and Mark Lassery from Avenue Capital. The episode also did a great job of showing how a former finance executive, Todd Krakow, became the Treasury Secretary, a position that former CEO of Goldman Sachs, Hank Paulson, once had as well. And the episode also accurately reflected Tony Robbins' use of a powerful, life-changing exercise called the Dickens method. As a result, I'm going to give this episode a buy rating. Please like and subscribe, and I will see you soon in our next reaction video when we react to Season 3, Episode 2. Thank you.